Hello everyone, and welcome to this presentation of how to detect early trends in any market and in any time frame. Welcome once again. My name is Stephen Primo. I am the president and founder of Specialist Trading, and thanks for joining us today at this early time for our weekly educational webinar. We have a lot of people from all over the world joining us today at this different time. We have people from as far away as India. Hello to them out there. We also have people in Europe as well as people all around the United States. So thank you for joining us. If you're new to my presentations, just to give you a little bit of background about the company Specialist Trading, we are, as always, first and foremost an educational company. As you see in these presentations, I always like to give my students and members just a little bit of education each week so that even if you decide not to purchase anything or even to become a member of Specialist Trading, you at least walk away with some bit of information I've accumulated in my career so that you can use to start trading. Hopefully it will elevate your trading to the next level. Now, I've been trading for 37 years. I started on the floor of the Pacific Stock Exchange. I traded on the floor. I was a specialist for 9 years, but I was on the floor for a total of 16 years. So I've seen and traded through just about every market, every imaginable way of trading. I've traded systems, strategies. I traded through the crash of 1987. So everything that I've accumulated in my 37 years of trading, I personally use myself, and I teach and mentor all of my students and my members of Specialist Trading. So we are, rather than just a company that spits out and generates signals for you to blindly take, that really goes against our philosophy entirely. What we try to do is empower you with all this knowledge I've accumulated. Hopefully we can put together a great trading plan, a personal trading plan that fits your personal needs, and then we feel that's what will get you on the road to consistency. Now, before we begin, we're required to show you this disclaimer, so please take a moment to view it. I'm going to show you a lot of performance results using some specific techniques that I want to share with you today, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So please take a moment to view our disclaimer. Also, I'd like to invite each and every one of you, if you haven't joined us already, to begin following us on Twitter. Here is our handle there, at SPCLSTTRADG. This is where you can follow us. We post a lot of great information, a lot of knowledgeable information, as well as free. We tell you when we're in signals, such as, excuse me, last night we were generated, one of our E-mini signals generated a buy signal, E-mini strategy number 5. So we are currently in that. I posted that on Twitter to let you know that we are currently long. And once again, if you want to become a member, you'll know exactly where our entries are, where our stop placement is, as well as our exits. So there's a lot of great free information. We told our Forex members to get along the British pound and made a quick 50 pips on that the other day. So there's a lot of great information, ways to follow what we're doing. Once again, our handle is SPCLSTTRDG. Okay, so before we begin, I really want to state once more that we are first and foremost an educational company. It's not just about providing you with signals so that you can blindly take them. I really feel that that's a recipe for a disaster, because if that is what it means to be successful, then why are so many traders losing most of their trading accounts? You know, if all we had to do were take signals from some trading guru who's been trading for a while, who says knows what he's doing, then why aren't the majority of traders successful? I really feel it comes to personal experience from really overcomplicating your trading. We try to overcomplicate everything. In fact, I remember when I first started trading, I had a dismal first 2 years of trading because I overcomplicated my trading plan tremendously. I was following about 20 indicators. I was waiting to make a decision until the news came out. And I couldn't do anything until I knew what the actual news was, or the earnings were for a particular stock, or what some announcement was going to be. And then lastly, I was following a ton of trading, so-called trading gurus. At that time, we didn't have trading rooms or chat rooms, but what we had were newsletters, and I subscribed to all of them. And suffice to say, I couldn't make a dime. Nothing was successful for me. So ultimately, my mentors, who were traders on the floor, got a hold of me and they said, Steve, your trading is far too complicated. You're not going to get successful that way. The way you become successful is by stripping away all of these so-called conventional ways of trading and making your trading as simple as possible. And it's really true, because after the years I've been trading, if you notice that people have been trading for 3, 5, 7 years, their trading plans are tremendously complicated. It's the people who've been trading for 20, 30, 40 years who have the simplest of trading plans. Most of them only have 3 to 5 rules. But it's the people who have been trading for a relatively short time that have these really difficult plans to follow, very systematic, very convoluted theory. So we don't want our trading to be that way. We want it to be as simple as possible because these are the things that have stood the test of time. So once I started to simplify my trading, that's when I started to become consistent. So that's what my goal is, to teach you how to trade with the specialist edge, which is really rooted in simplicity. So what we're trying to do is to get all of our traders to become consistent. We're not promising you so many hundreds of % you're going to make a year. We're not promising you you're going to make a tremendous living off of trading. What we're trying to instill is consistency, because consistency will have you trading 20, 30, 40 years. No great trading plan will have you doing that if it has a tremendous year and then loses it all the next year. There's nothing that we want to follow according to that plan. What we want to follow is something that is consistent. And what I've learned in 37 years is the only way to get there is to keep your plan as simple as possible. So simplicity equals consistency. That's what's enabled me to trade for the last 37 years. All right, so with that said, here's what you're going to learn today. We're going to share with you some great techniques. I'm going to share with you a short-term directional tool. Now, this is a proprietary tool that is just promoted and marketed for the members of Specialist Trading, but I'm going to show you some great examples of how it's used and how you can actually become a member using this particular edge. Then I'm going to share with you a 2-bar pattern setup. That is a very nice setup you can start using as early as today if you like, but when we apply it in a conjunction with this short-term directional tool, we see how powerful these two things work together. And I'm going to show you a lot of current entry examples where, I'm not going to just show you examples that are perfectly matching for 2 or 3 years ago. I'm going to show you examples that happened as early as this last couple of days. Okay, so I'm going to give you a lot of great free information. Take out your pencils and paper. For those of you who are always wondering, this presentation is being recorded, so there's no worry if you have to leave early or if you can't happen to watch the entire thing. If you are busy trading, you can request a link to this, and I will give you that information, or it's probably there in your information where you signed up, all the information to email us as well as contact us. We will send you a link. Lastly, if you have any questions, for those of you who have taken my presentation before, I'm sure you're all familiar with that. I love to answer questions, but I like to answer them at the very end of the class. So if you have a question, write it down and try to remember it, and I'll get to it at the very end of the presentation, probably in about 20 or 30 minutes from now. Okay? All right, so why don't we begin? Let's start out with talking about the PET D. This is the great short-term directional tool I'm talking about. This was something that was taught to me on the floor, and it's a great tool. It's a great short-term directional tool. The only problem was, at the time I learned it, it was something that had to be constructed by hand. I had to look at a few indicators, come up with the the numbers, and I would know the next day where the short-term trend was. It's very difficult to do if you're trading intraday. Well, fast forward 37 years, and now with the advent of high-speed computers and programmers, we were able to program this and put it into a proprietary early trend detector, and it's a color bar algorithm. All right, so what we've done now is simply color the bars that tell you if you're in a short-term uptrend or a short-term downtrend. We've given you other tools before to tell you what the overall trend is, but we're talking about short-term so that we can confirm what the overall trend is doing. So here's what you're looking for. With a series of green bars, it's telling you that the short-term trend is up. Now, this is an ideal scenario. Not all of the bars will always be colored green. At times you will see that, but most of the time you'll see anywhere from 70 to 80% green and with a splash of red here and there. So that will tell you most likely that you're in an overall uptrend. Now conversely, if you see the majority of bars red, then that's telling you that you're in an overall short-term downtrend. So these are perfect scenarios. This is what we're looking for, and it's a great, great tool because once again, now we know what the direction of the short term is. Now here's an older example in AIV. As you can see here, we're going straight up, but looking back in hindsight, we knew well at the beginning of this uptrend that the majority of bars turned from red to green at this point here in December, and then going all the way up, we would have a splash of red now and then, but the majority of bars continue to stay green, telling us that we are in an uptrend. The best thing is that this is a short-term trend that can help you in advance of news. Everyone always says, like, well, Steve, I can't make a decision until I know what the numbers are, until I hear earnings or an announcement. Well, this will tell you in advance. Why? Because it is a proprietary tool that listens to the market, the momentum of the market. I'm going to show you some older news examples to see how this works. Now, going back to May of 2013, about a year ago, the electric car maker Tesla defies skeptics, as advertised here in this NBC News announcement. It said the California electric vehicle manufacturer Tesla reported this past week its first ever profit of $11.2 million as sales of its Model S sedan outpaced even its own optimistic expectations. So it's fantastic news. Tesla's shares surged 24% in the hours after the market maker's first quarter earnings announcement, doubling since hitting a low point last winter. So the way most people would trade is after they read this news, they say, boy, that's great. I've been watching this stock, and now it's given me a reason to jump in. I want to purchase this stock, or I want to start trading it, because this is obviously very positive news. It's a very good sign that it's going to be headed higher. So if we look at the chart and what happened, where this red arrow is telling us where the earnings report came out. And as you can see, it was good news fundamentally, and the company started to go up this past year. All right? But guess what? A month or two prior to that, the PET D was signaling all green bars, telling you that we were already in a short-term uptrend. So this could have given you the green light to start trading it a month or two prior to that announcement. So wouldn't you have liked to already have been in Tesla at the $40 range before it started going all the way up into the hundreds? Okay? Now we know that Tesla isn't doing that right now, but we're just showing you how the PET D is many times in advance of major news announcements. In fact, here's another old news announcement in Facebook. This was last year in July. It says Yahoo reported that Facebook shares jumped 28%, and Wall Street sees more added growth. So this obviously, off face value, is good news. Facebook Inc. shares opened up 28% higher on Thursday after the company reported a huge jump in mobile advertising revenue. Okay, so this is great news. Let's say you were looking for an excuse to jump into Facebook. We all remember how terrible Facebook did on the initial IPO. But now that you're thinking, well, this is great, the company's starting to get back on board, I'm going to jump on in based off of this news. So if we look at the chart, we see here that here's where the announcement was made on the 25th of July. Okay, and it did go up after that. But if we follow that, prior to that announcement, guess what? We had a majority of green bars that the PET D was signaling us that we were already in a current uptrend. That if we wanted to go long or look for long signals, we could already do that because the PET D was confirming that the short-term trend was already up. So do you see what a beautiful trend identifier this is? Because many times it will give you the signal prior to the news. Now we're not saying just because you have a series of green bars you buy at the market, or a series of red bars that you sell at the market. But what it does tell you is that the minute you see those, you should start looking for setups, either with one of your strategies or with one of ours. All right, so let's look at the advantages to using the PET D. Obviously, as we just showed you, it gives you the security of trading in sync with the current trend. And when we say current trend, we're talking about the short-term trend. Now, coupled with an overall trend strategy, this will really increase your odds for success because, as we know, many times in an overall trend can still be up, you'll have these short pullbacks or sell-offs. So many times, as you're waiting, you want to know, well, when's this sell-off going to conclude? Well, what you do is you simply look for the bars to turn back up to their green state, and then that's your chance to get back in after the short-term pullback has concluded. Also, this can be applied as a stop placement. What if you were long and you were making a tremendous amount of money and you're starting to worry about, well, how long should I hold this? Well, once the bars turn red, if you were long, you could simply use that as a stop placement. Lastly, it supplies you with numerous trading techniques that are based on the color bars. Remember, it's not just enough to see the bars turn red or turn green. We're never going to buy or sell just because they're red or green. What we want to do is see some type of setup or some type of structure that's giving us a technique to get in or to get out. And this, and what we do in the course, the PET D course, as well as for all of our members, we provide you with numerous trading techniques. In fact, let's talk about one of them right now. This is a great trading technique that, accompanied along with the trend, will give you some nice results. But when you accompany it with the short-term trend using the PET D, you really boost your odds for increasing your gains. All right, so here's what you need for this particular technique if we're going to be trading with it to really increase our odds. That's obviously the PET D. We want to have the PET D associated with this so that we can start knowing what the short-term trend is. And then we want to look for a 2-bar pattern, and that's called specifically an inside day bar pattern. Now, this is a very common 2-bar pattern. A lot of people aren't really familiar with it. Some people are. So if you're not, let's just give a short explanation of what this 2-bar pattern is, and then I'll show you some actual charts of it so you can really understand what the inside day is. Inside days, this is by popular definition, inside days are days where the chart bar has a lower high and a higher low than that of the previous day. Okay, you may want to write that down. I'll repeat that again. This is a 2-bar pattern. It's called an inside day. And inside days are days where the chart bar has a lower high and a higher low than that of the previous day. Okay, so let's look at an actual description of what that looks like. This is an inside day pattern, and it's a 2-bar pattern. All right, so we could label this first bar day 1, and we can label the second bar day 2. All right, so you see how day 2 is its range from top to bottom is inside the range of the previous day. Okay, so we have a lower high. The high is lower, and the low is higher. So this is what an inside day looks like. Now remember, we're looking at daily bars. You can still apply this to 5-minute bars, to weekly bars, to monthly bars. It doesn't matter. It's called an inside day, but it could easily be called an inside 5-minute bar, an inside monthly bar. It doesn't matter what time frame we're viewing. All right, so this is a setup, an inside day. Now, what's our buy setup? What's our buy pattern? Well, we want to look for both bars of an inside day pattern to be colored green when we've applied the PET D. This is our signal that quick upward momentum may continue. So all we want to do is look for an inside day once again, and we want both bars to be colored green. That's it. So that's a really high powerful signal that we're going to continue upward momentum very quickly and very abruptly. How about a sell pattern? Well, we're going to look for both bars of an inside day pattern now to be colored red. This is our signal that the quick downward momentum may continue. So in this case, we're just going to reverse it. We want all of the 2 bars to be colored red. This is telling us that we're most likely coiling by having an inside day, but the result is going to be more momentum move to the downside. Why? Because the PET D is confirming it. Now, this isn't 100% perfect strategy or way to trade. In fact, we're just giving you a setup. This is not a full-fledged strategy. We haven't talked about where to place a stop or where to exactly enter. There's a number of ways which you could enter on this. We haven't even talked about where you would exit. But this is a great, great high probability setup to apply to your trading regardless of what time frame or what market or what direction. So let's look at some stock examples for all you stock traders out there. We'll start out looking at daily bars. And as we see here, SNDK. This was just last month. It's about a month ago. And the bars started out in April, green, and then we had this downward move. So this was telling us that the PET D was now in a short-term downward direction, as we see here. Okay? How could we have taken advantage of that, though, as we were in that downward direction? Well, we simply look. Here's an inside day pattern right here. Now, I know it doesn't look like a lot, but this is a good 3 to 4 points, quick momentum move to the downside after that 2-bar pattern ensued. Why? Because both bars were colored red. Now, as we kind of bottomed out there, guess what? We spiked up, and now we gapped up to the upside, and now all the bars are green. We've had this nice uptrend currently up until roughly now in SNDK. How could we have taken advantage of that? All we have to do is look for inside day bars. They're all over the place. We have 1, 2, 3, 4, 5 telling us that quick momentum is most likely going to ensue rather quickly. Now right here, we didn't really see a lot of it. I guess most of that was because we had already had a big momentum move. But it didn't also mean that we were going lower as well. So you could have purchased anywhere around here, around the $85 level, kind of gone sideways for a week or two, and then that's when momentum kicked in. But as you see here, another inside day, and the momentum kicked in again, and it continues to rise. If we look at ABX, as a current chart of ABX, looking back in hindsight, obviously we've been going lower. Okay, so we would have loved to take advantage of this. How could we have shorted ABX if we were an aggressive trader? Well, we see that the majority of bars turned red at this point, so let's look for inside days to the downside. And you can see quick momentum moves ensued after that. Here's a chart of K. Now the overall trend has been up. Here's where we talk about you have these small little instances of opposite color of red, but for the majority of times the bars are colored green. So what we're looking for, since we're in an overall uptrend, is a short-term, really quick momentum setup, which you find all over the place. These are all inside bars, colored green, telling you that momentum is most likely continuing on the upside. How about the E-mini? All right, so let's look at some different time frames. As opposed to daily bars, let's look at a 60-minute time frame. This is on the 12th. This was a week ago, last Monday, a week ago. We see here in an hourly chart, we had a nice upward move here. And guess what? It was given a signal right here before the move even started with a inside day colored, both colored green. And you continue to see those until it looked like we topped out, and guess what? We fell out of bed. Well, someone would say, well, boy, how would this have helped me? I probably would have given everything back. Well, not really, because you could have exited at these points and gone short. Excuse me. As we see here that we had an inside day followed by another inside day and then another inside day. So whatever gains you made off of these, you could have exited and gone short and made all these gains back to the downside. And this was just on the 14th, which was just a week ago, roughly. Now, if we want to go to even smaller time frame than that, we look at a 2,000 tick bar chart from yesterday. This was the first hour or two of yesterday's trading. And as we can see right off the bat, we gapped up higher. This is the 21st. We gapped up and went up and then slowly fell out of bed and started to go lower. You can see the majority of bars here are green. We have a splash or two of red. But then when the majority of bars turned red, that's when we were definitely in a downward move. So is there any way to take advantage of these moves? Well, yes, look at all the inside bars here on the upside. And then right away, we had some inside bars to the downside, giving us a quick warning that we were most likely headed lower. Why? Because the PET D, along with an inside bar, it told us that the momentum was most likely changing to the downside. Now, this also applies to the Forex markets. If we look at a weekly chart of the British pound, once again, looking back in hindsight to last year, last September, to now, to currently, we've been going in a nice, steady upward move in the British pound on a weekly basis. Okay, looking back in hindsight, we go, boy, how could we have taken advantage of this nice move? Well, if we would have applied the PET D, we would have seen that all the bars are green. They've never even turned red. So this was telling us right off the bat, all the way back to September, that we're in an uptrend, a short-term uptrend, so that we could only be looking for long setups. And if we're looking for a real high probability setup, we'll look at all of the inside bars here. Okay, 6 instances going back this past year on a weekly basis where you could have looked to go long. And here's a daily chart of the euro-yen from this past week. We see here that starting on the 8th and 9th, we started to have consecutive bars colored red. So we know we're in a short-term downtrend in the euro-yen. Right here at the, I believe on the 12th, we had an inside day pattern. So this was telling us roughly a week last Monday that you could have gone short the euro-yen on a daily basis, and look what happened. From 140 all the way down to 138.5. If you were just trading one lot, that's $1,500 if you stayed in. So these are great, great high probability signals that not some trading guru or not some chat room or not some news report is telling us. Remember, those are things that overcomplicate your trading. All we're doing is looking at the market and a setup applied with one simple tool. And look at how easy it is to jump on board the direction of the market. Here's a 15-minute chart of the British pound from this past week. As we see here that nothing was really happening. We were mostly colored red. And then we switched over to the majority of the bars colored green. So most likely we're going into an upward mode on a 15-minute time frame of the British pound. And guess what? Right here we have a inside day pattern on a 15-minute time frame. So if you were an intraday trader of the British pound, you could have said, well, you know what? I'm going to take this as a signal. I'm going to follow this. And you would have had a nice little gain there in the next hour or two just trading the British pound. Now this also works in monthly charts. We see here on a British pound monthly scale going all the way back to 2006. I really just want to show you how of a high probability technique this is. We originally were in this nice uptrend going in the British pound. Why? The majority of bars were green, and you could have taken advantage of all these setups here, inside days, going to the upside. But guess what happened here? Now the majority of bars turned red, and we were given a really nice warning signal right here, and look what happened. Okay? So do you see how when we apply these two really high probability setups, the PET D with an inside bar, how we get this really nice, powerful scenario to be in sync with the market. All right, so let's recap before we go into question and answer. I showed you a simple trading technique using the PET D, and it pinpoints quick momentum moves in any direction and in any time frame, as well as in any market. But here's one thing I want you to notice. I know a lot of you will say, well, Steve, this is simple. I don't really need the PET D because the PET D just tells me the direction of the trend. I can see for myself what the trend direction is, such as this example here. An older chart of CRM, we see here that CRM is most likely in a downtrend. It's going lower, so I don't need a proprietary tool to tell me that we're in a short-term downtrend. I can see that for myself. So if we're in a downtrend, I'm going to look for an inside bar, such as this one right here, and most likely the trend's going to continue. So let's just say you decided to use this tool, which is still a high probability setup in itself, but then look what happens, okay? This will happen from time to time. So what went wrong? Well, all we know is that nothing works 100% of the time, but when you add the PET D, it will give you those higher probabilities for success. If at best, it will keep you out of losing trades such as this. Because if we would have added the PET D to the CRM scenario here, we would have noticed that one of the inside bars was red and the other was green. So what is this telling us? It's telling us it's not a valid setup. Remember, in order to go short, we would need both of these bars to be colored red. And in order to go long, we need both of them to be colored green. So we have neither, so there was no trade here. So what the PET D did was keep you out of this trade altogether. Now, had you used the PET D, you would have totally sidestepped this losing trade and then waited maybe about 5 more days until you got a nice inside day, and then you could have reaped the benefits of that. Now, that was an older chart of CRM last year. Let's look at a current chart of ABX. We had talked about this earlier. Once again, this is a nice technique. You can start using this inside day pattern along with whatever you're using for a current trend identifier, and that's fine. You'll have a nice high probability setup. But in these examples I'm showing you, you see how powerful it is once you apply the PET D, because right off the bat, someone here just this past couple of weeks ago could have said, well, ABX is in an uptrend, so I don't need the PET D to tell me I'm in an uptrend, and all I need to do is look for an inside day pattern here, which we have. So this is telling me we're in an uptrend, I have an inside day, I'm going to go long. So you could have purchased it, and then look what happened. To show you how powerful the PET D is and how it can help you, if we applied the PET D, we see here that, once again, the bars were not colored in sync. We would have need both of these bars to be green in order to go long. But the first bar was colored red, the second was green, and therefore it wasn't a valid setup, so we would never have taken this trade. If we would simply apply the PET D and wait for both colors to be in sync, we would have seen that 2 days later we had a signal to go short, and that would have been a nice trade to the downside. So this is how powerful the PET D is. This is why it's really a great tool. Even though just using a standard inside day with whatever trend follower you're using could help you, the PET D will elevate it to the next level. Please remember, the PET D is not an indicator nor a strategy, but it's a unique color bar tool. It's based on momentum, and it's designed to show you in advance when a trend has most likely begun. Remember, the PET D is a proprietary tool. We can't divulge what it's based off of, only that it's based off of momentum, but we can't go into detail, in other words, and tell you exactly how it's constructed. But it is a fantastic tool. I use this on a daily basis. I used it trading prior to giving this presentation today. So, points we want you to remember. It's not a complete strategy what I just showed you. We didn't talk about entry points. I didn't talk to you about where would I enter using this technique, or where would you place a stop placement, because we're not going to sit here and tell you that each one of these inside day setups works. Sometimes you'll be stopped out. What about money management? How many lots should you trade? How many shares you should trade? These are all extremely important pieces of the puzzle that one needs to know about when trading with the PET D. So you need to have a strategy or some type of structure in place. It's not just enough to say, well, here's a great setup pattern. I'm going to buy or sell whenever I see this. You need to have more pieces of the puzzle in order to use this directional tool. If I could just take a few moments today and talk about a great strategy coupled with the PET D. All right, for those of you who say, I would love to have this, I just don't have a strategy to trade with it. Well, we're offering now a two-part combo. This is a 2-for-1 attendee special. If you want to be using a strategy that has high results already, that's our strategy number 4. Now, as you see in this graphic here, it says E-mini strategy number 4, but actually it works in any market, any time frame. This is just the graphic for this particular box here, but you tell us which market you trade. It doesn't matter. The strategy number 4 setups work in daily bars of stocks. They work in E-mini intraday trading, and they work in Forex trading. So this is a great, great strategy. In fact, let me show you some current trades here applied to stocks. The same strategy that can work on the E-minis and Forex applies to stocks. If you're a member of the strategy number 4 course, you would have most likely taken these signals if you were a stock trader. We see here, going back just a month ago, we had 4 signals to go long UPS. 3 of them were profitable. 1 was a loser, as you can see on the 8th. Okay, so this is not bad. 3 out of 4 trades in one stock in the last month were winners, and you had some really nice gains accompanied by a small loss there. So that's not bad. There's nothing wrong with that. But how can we make our results even better? Well, if we couple this with the PET D, we apply a little structure to trading the short-term trend of UPS. In other words, we want to use the PET D in conjunction with the strategy number 4 setup. Therefore, on the day we get a signal to go long UPS, we want to make sure that that bar is colored green, because that means that the PET D is telling us that the short-term trend is up. Conversely, if we were going short a stock or the E-mini or the Forex, we would want to make sure that the PET D was telling us that that setup bar was red, giving us the confirmation to go short. All right, so this is just a blank static chart. If we apply the PET D, we see here that on the very first trade, guess what? Our setup bar was red. So had you applied the PET D to strategy number 4, which as you can see already is a very consistent strategy, you would have not had 3 winners and 1 losers. You would have had just 3 winners, because you would have sidestepped this signal on the 8th. You would not have taken it, and you would have simply said, well, no, that's not a valid signal. I'll wait till the PET D tells me that the short-term trend is up. Well, going on to the 16th, we had the signal to go long here, and the bar was green, so it was valid to take this signal. On the 28th, we had another signal to go long, and it was a valid signal to take. Now, you could have either taken a very quick gain on this trade, or you could have held out for all these longer moves. Now, we also had another confirming signal on the 7th, which was just a couple of weeks ago, telling you to go long UPS. So you see how when you have a very consistent strategy coupled with a really high probability trend directional tool, you really increase your odds for success. So you can also use the PET D once again just on its own. Here's a long-term way to trade it. This is the S&P index going all the way back to 1994, just roughly about 20 years ago. And we see here how we have these nice peaks and valleys. And if we were trying to find out what to do with our long-term portfolio, it's very difficult to look back over time, because how would you know when to hold it? Wouldn't it be nice to get out somewhere around here so you could sidestep all these great downward moves and then get back in? Well, if we apply the PET D, we see here that it would have been easy to follow all of the green bars up. The minute we had a nice number of red bars, we get out. We would have missed all this downward move. The minute we get a nice consistent number of green bars, we get back in, and so forth. And we see we would have missed most of the major sell-offs in the markets past 20 years and continue to be holding on to the major upward moves. So these are 2 extremely powerful tools to use, the PET D accompanied with a very consistent strategy, strategy number 4. Now, if we sold these separately, this would run you thousands of dollars. We discounted the price for all the attendees down to roughly $2,000, but we discounted it even more. So for a very short time, roughly for the next couple of days, we're only going to discount this down to $14.95. So if you're interested in having both of these, the strategy number 4 and the Primo Early Trend Detector, or the PET-D. We're really deep discounting it down to $14.95. The best thing about this is that there are payment plans. So if $14.95 is too much for you to meet in one payment, you can set up something with one of our trading consultants, and you can be paying on a monthly basis, but you'll be able to have working both of these right away. So this is a great, great deal to be able to take advantage of both of these powerful tools, both of these powerful methods for a very deep discounted price. Remember, this comes with instant course access. This is nothing that will be expiring within a year and you have to upgrade once more to another version of it. This is what you'll be getting for right now is yours for good, yours for life. It comes with detailed instruction up to 5 videos. I teach you all the entries, all the exits, and all the stop placement. We also provide you with an add-on for signal alerts. So a red or green arrow can be produced when there is a buy or sell signal in strategy number 4 alone. You also get weekly video trading webinars and seminars that have been recorded and archived for you to listen to. This includes, once again, both the add-ons, not only the strategy number 4 up and down arrows, but the PET-D that you can access onto your computer, and then access to my personal email address. You can ask me questions anytime you like. Remember, this would normally cost you thousands of dollars individually. We reduced this down to $19.95, and then once more for the next couple of days for the attendees today down to $14.95. Payment plans are available. So if you're interested, you can talk to one of our trading consultants. And here's the info if you want to contact one of our trading consultants. You can email us at trading@protraderstrategies.com or call us directly at area code 310-598-6677. All right, thank you so much for waiting. Now I'm going to open up the question and answer box. If you have any questions concerning what I just taught, we can go over them. I'll try to go over them as much as I can and in the order. First question I always answer, which is probably the most popular question, is this being recorded? Yes, it is. You can email us at the email address provided right there in front of you, or call us and we will provide you with the link for this particular recording. Let's see. Philippe is asking, is this available for TradeStation? Yes, it is. It's available for TradeStation, and it works tremendously on that because the majority of what I use is on TradeStation. So it works there as well. It also works for Metastock. For you Metastock users, it works fantastic. It works for NinjaTrader, and it works for MT4. So with all of those of the top different charting software programs, you can apply Strategy 4 as well as the PET-D. Peter asked, why don't you use candlesticks? I do use candlesticks, Peter. In fact, we have strategies that are based just off of candlesticks. But this example was mainly for showing that 2-bar pattern, which it wouldn't matter if you were using candlesticks or not. Also, it was mainly for using the color of the PET-D. Now, a lot of people are always concerned with, they say, well, Steve, I trade candlesticks. Will the PET-D work with candlesticks? Yes, it does. It works. I trade with candlesticks as well. I apply the PET-D with my candlesticks. So there's no difference. You can see what the colors are with the PET-D even when using candlesticks. Okay? Let's see. Is it like Heikinashi? No, it's not. It's not based on that at all. It's just, all I can tell you is that the PET-D is based off of momentum. It's not based on any other candlestick pattern or similar patterns or is it based off of any type of overbought, oversold oscillator. It's not based on that. Okay. Let's see. Philippe, yes, it is very interesting. And Philippe, like I said, I mean, we are first and foremost educational people at Specialist Trading, and we're traders. Okay. I make my living really off of trading. So I use this personally. I've been using this for roughly about 30 years. I use the PET-D and strategy number 4 on a daily basis. So, you know, I just know firsthand that this is something that works. I'm not going to sit here, though, and tell you that you're going to become a millionaire the way I know some people will tell you, and they'll say you'll make 2,000% in the first month. That's not what we do here at Specialist Trading. As I stated in the first opening moments of this presentation, we try to provide our students with sound, fundamental education. So we want to inform you on the things that have stood the test of time that work, and then we try and fit and mold a trading plan for you so that you can feel comfortable trading, because in my opinion, that's the only thing that will get you on that road to consistency. So these are real sound and very reliable things that have stood the test of time. Sure, will they go and have some losses every once in a while? Yes, but they'll be small, minimal, and then you can get back on board with your consistency. So that's what we're looking for. And that's what we try to instill in all of our members. Let's see. Yes, Victor's asking, is this recorded? Yes, it is. Lorak is saying, what's the use of the webinar when we don't have the expensive indicator? Oh, sure, it's very practical, Laura. If I had known, let's say 35 years ago, about how to use an inside bar, it could have saved me tremendous amounts of money, because when I first started trading inside days, I just said, well, here's an inside day. Looks like we're going lower, I'm going to short it. Or looks like it's going higher, I'm going to buy it. Well, once you know that you trade an inside bar in sync with the trend, well, you've already increased your odds for success. So this is what we shared with you today. Now, we shared with you a proprietary trend tool, but let's just, I think I stated about 5 or 6 times, even if you don't use the PET-D, you can use this with any one of the trend identifiers that you want to. You're already increasing your odds for success. But most people don't use an inside day in association with the trend. What they do is try to use it for a topping or a bottoming formation. Okay, and we all know that that's a recipe for disaster. So I think just what I've explained the last 30 seconds could have helped you tremendously with your trading. Most people will see the market going straight down, and then they'll see an inside day, and they'll say, oh, that must be the bottom. Actually, more than likely, it's telling you that it's going to be heading lower. Same thing with an inside bar to the top of a rally. So coupled with the trend, you can use that technique, and I think that's tremendously insightful and informative. If someone would have told me that 30 years ago, it would have saved me a lot of money. So we're giving you all this information today, Laura, for free. So in my opinion, extremely practical. Is it valid for intraday minutes, tick charts? Well, yes, Philippe. I showed you a number of inside day bars that were on 5-minute time frames and even tick bar charts. Just remember that the smaller time frame you go, you're going to see a lot more of these setups. A lot of traders like to see a lot of setups, so that's what you'll be looking for. Whereas if you look at a weekly bar, you're going to see less and less setups, so it all depends on what type of a trader you are. But yes, I look at them all the time on 5-minute charts and on tick charts. Okay. Let's see. What if one red and one green inside day? Not buying yet. Correct. In other words, Alana, you want to see them both in sync. So in other words, if I have one red bar and one green bar, as I showed you in those examples, I wouldn't do anything. And I think this is kind of like what the other gentleman was talking about. This is why they are unsuccessful trading it, because they're out of sync with the trend. So what the PET-D does is help you be in sync with the trend, and it helps you to know which side you should be trading on. But it takes it a step further, and it tells you whether you're in sync with the short-term trend. So that's what the PET-D really does. It tells you the minute short-term trend and if you're in sync. So if we see 2 red bars, we know that we have confirmation, high probability to go short. If we see 2 green bars, I'm sorry, to go long. 2 red bars to go short. That's the beauty of it. Lorak says, actually, it is a harami. No, not really, Lorak. This is an inside day pattern, which is, we don't, a harami is a candlestick pattern. We're not concerned with any of the candlestick patterns in this. I think you're thinking about something else. This was, harami is a candlestick, and what we were showing you today is an inside day pattern. They're 2 totally different things, okay? Mumat is saying, my very first goal is disability, retirement, income, after income. Whatever money comes is great. So please, I have to go out. Please send me the recording. Okay. Well, once again, contact us and we'll send you a link to this recording. And thank you for the nice comment. Yes. Once again, I've given you free information today that you can start using as early as today, even if you don't want to use the PET-D. Just remember, I think where most people make the mistake of trading inside bars. Once again, first of all, they're mistaken. I think that one gentleman thought it was a harami, and that's improper. It's an inside day, which is totally different. And then also, you want to be in sync with the trend. So you're getting some valuable information here. Peter asks, where is the entry point after the inside day? Well, Peter, this is what we teach in the course, but there's a number of ways you could do it. We would always wait for confirmation. So just to tell you right off bat, I would wait, if it's a double green bar, I would wait for prices to trade above either one of those 2 green bars. You can be the inside bar or the outside bar, whichever one. But I would wait for confirmation that you're going in the desired direction. Okay, that's just one of the things we teach in the course. We also teach you advanced entries, advanced exits, and also stop placement. Now, also one thing I didn't mention, in the PET D course itself, this is not even the strategy number 4 course. In the PET D course alone, there are 4 techniques such as I just shared with you. There are 2 continuation techniques and 2 pullback techniques, which are entirely different from strategies, but they're techniques on which to find high probability setups. So we teach this in the course as well. Okay. Murak says, it came in late. What is the definition of the PET-D? Well, the abbreviation is for the Primo Early Trend Detector. So what we're trying to do is have a short-term trend identifier. So that's what the PET-D stands for, and it's based off of a proprietary tool. Well, we don't go into detail because we are right now deciding whether we want to license this out. Many hedge funds are using this as well as individual traders, so we don't want to divulge it so that it can be just passed around freely to a bunch of people. We feel it's that valid and that important. But it's a proprietary tool based off momentum that is great in giving you high probability short-term identifications. Okay. Peter asks also, well, when do you exit? Well, once again, Peter, I'm sorry, but that's in the course. All this information, once again, is given in the course. If I were to give that to you right now, Peter, all the people that spent thousands of dollars just purchasing the strategy number 4 course would be very upset. So we've given you a great setup right now, and we're hopefully trying to just, give you some information so that, if you want, you can apply your own exits, your own entries, and your own stop placement if you like. Hemant is from India. Hello, Hemant. How are you? He's saying, hello, sir. If the PET-D color changes is happened, then we wait for inside bar. My question is, the past color of the bar will not change in any circumstance because most of the software gives signal and suddenly it changed and disappeared when the entry exit. Please excuse my English mistake. I'm not really sure I understand the question, but once a bar is colored green, it stays green. In other words, it's not going to change back to red or change to a standard a neutral color. So once it's colored green, once the bar closes, it will stay there. But from time to time, you may see an intrabar, especially if it's a longer bar, such as an hourly bar, change from green to back to red because it's dynamic. The trend identifier is calculating whether we're in a short-term uptrend or downtrend. But once the bar closes, it should stay at that color. In fact, I've never seen it happen where it changes back. So if anything, maybe you just might want to refresh your charts. I'm not sure what charting software you're using, but all the bars, once they have closed, stay at that color. So you don't have to worry about them changing back if that's what your question is. Okay? Dan asks, does the PET-D work in my own local platform or is it available on your platform? No, it works on yours. In other words, if you have TradeStation, Metastock, MT4, or NinjaTrader, we give you the add-on. You simply upload it, and it's yours. And it's yours for life. As we said, we may in the future license this so that you have to upgrade every 6 months. But we're not at that point now, so I would take advantage of this discounted price. Not only are we discounting the price, but you're going to be getting a strategy, really powerful strategy as well for this low discounted price. And if you want, you can get a payment plan associated with that. So it's a great deal. It's yours to keep for now. It's yours for life. Okay? Hamid says he has purchased strategy number 4. It's good, but the idea is good or not. If any practice, I require real trade. I'm not really sure, once again, what your question is, Hamid, but if you have strategy already, I'm thinking you're thinking about purchasing strategy number 4. Just contact one, or I should say the PET-D, just contact one of our trade consultants because I deal mainly just with teaching. Everything I do is instructional and teaching and intraday to daily trading in all of the markets. Anything in terms of if a software is not uploaded properly or if the bars aren't continuing all the way or if something of technical issue, please refer them to our trading consultants, and there's the email right there, okay? Lana is asking, what platform do you use? My TradeStation doesn't allow me to draw a red, green bar, only one color. I don't understand. They should be. Once you upload TradeStation, it should be fine, and they should have the PET-D working perfectly. Once again, I would call, this is a technical issue, but we should be able to help you set that up really easy if you want to purchase the PET-D, and it will provide you with up and down signals telling you when strategy 4 is issuing a buy or sell signal. Okay, so you can contact us once again for those technical questions, and we should be able to steer you in the right direction. Let's see. Lee is asking, you missed the first 15 minutes of the webinar. Can you just review the open, close, and PET-D setup? Well, really, I can't go back to the actual slides, but we're looking for a two-bar pattern, which is called a inside bar. And what that means is it's two bars. The first bar range from top to bottom, and then the second bar's range is within the first bar's range. So therefore, it's inside the range of the first bar, I should say. Now, that's a very powerful pattern because basically what it's telling you is that the market is coiling and it's most likely going to do something, some momentum move to the upside or the downside. But most likely we don't know which direction that is. Even if we apply a trend tool, it will give us some higher probability, but the PET-D gives us great probability because if both of the bars are colored green, well then most likely we're going higher. If both of the bars are colored red, most likely we're going lower. So that's this really great high setup that we've been sharing with you today. Bob asks, what is the difference between a system and a strategy? A very good question, Bob. I don't have a lot of time to go into that. Just to let you know that the only thing that I personally trade and that we teach and market at Specialist Trading are strategies. Okay? I have traded systems before. I've taught systems. A system is rule-based, and it means that regardless of the market conditions, if we're going straight up, if we're going straight down, if it's choppy or volatile, you have the same set of rules that you must implement each time. Whereas a strategy is 70% rule-based, meaning that 3/4 of the strategy are rules, but we allot around 25 to 30% for discretion. Now, when we say discretion, we don't mean that, well, are you feeling lucky today? What's your feeling? Are you in a good mood? It's not that type of discretion. It's discretion that is based off of experience. It's based off of insight that you've seen while trading. In other words, this insight where you say, you know what, I've seen this pattern or this market environment before. I'm going to adjust accordingly and trade more aggressively or trade more conservatively with all the information, all of the tips and techniques that Mr. Primo has provided for me. That's what we mean by a strategy. We want to fine-tune it to meet our needs. We don't want people trading blindly the same way each and every time. It's been my experience in 37 years that if you trade that way, it's a recipe for disaster. You'll never get on that road to consistency. You have to become a part of the process, and that's why we only teach and trade strategies, because a strategy allows you to become a part of the process. Okay? I hope that answers your question, and that's why we trade those. Okay, let's see here. Let's go a few more questions. Does it work on TC2000, Barbara is asking. And as you can see here, my operations manager, he answered that for you, Barbara. It says, yes, you can apply the rules of any of our strategies on charts TC2000, but we cannot have an add-on for the PET-D. So you can apply strategy number 4 rules. We just can't give you that add-on for the PET-D. It's not associated with that. Ken asks, do you still need to be in sync with the trend when using the PET-D? That's a very good question, Ken. Yes, most of our strategies have an overall trend identification, and we always want to be in sync with that. Sometimes the PET-D will be out of sync with that. The PET-D will be telling us on the short term we're in a downtrend, but overall we're in an uptrend. Now, we try to be in sync at all times. We think there's a higher probability if your overall trend is in sync with your short-term trend. But having said that, if you are more advanced traders, there are a number of really good setups where you don't have to follow the overall trend. You can follow just the short-term trend of the PET-D. So it's entirely up to you. This is, once again, your discretion. This is where we say we only trade strategies. One trader may say, oh no, Steve, I want to make sure that both my short-term and overall trend are in sync. Another trader may say, no, I'm going to take the setup of just the short-term trend. So this is why we say trade what feels comfortable for you. If you were trading a system, you couldn't do that. You have to blindly follow the rules each and every time. But with a strategy, you're allowed 30% discretion. Okay? Many of you are saying thank you for the education. You're more than welcome. Will a recording be emailed? Those will register, so maybe we go over the lesson again. Yes, it will. And what do you mean when you say inside day? Is this a reversal pattern? No, Lee, this is not necessarily a reversal pattern. Many times it can be a continuation pattern. I would say the best thing is to go just Google inside day pattern. You'll see many examples of that. Okay, so what we want to do is use that. When you see an inside day, what the market is telling you is that most likely you're getting some type of a coil, some type of a constriction, and you're going to explode in momentum. The only trouble is we don't know which way that explosion is going to be. We don't know if it's going to be upside momentum or downside. When we apply it with the trend, if the overall trend is down, most likely that movement is going to be to the downside. If the overall trend is up, most likely that trend will be to the upside. And as one person was saying before, this is of no use to us. Actually, it is. You can apply any trend identifier you'd like, and you'll have a nice high probability setup. But if you want to go even further than that, we apply the PET-D. And so we don't have to rely so much on an outside trend. What we do is we look to see what the colors are of the inside bars. If both are green, it's telling you high probability the explosion will be to the upside. If both are red, it's telling you most likely a very high probability the momentum move will be to the downside. That's how simple it is. Okay. A few more questions here. It says, Eddie says the color of the bars is based on today's close versus yesterday's or today's close versus open. Actually, Eddie, it has nothing to do with open or close. That's not included in anything. So it's just something that, you know, once again, this is proprietary. We cannot divulge any of this. Holger says, I am from Germany, and I hope I will be able to learn much from you. I am more of a day trader. Great, Holger. I believe you are a new student of ours. I want to thank you and welcome you aboard. Remember, if any questions that you have or anyone who decides to become a member, anything pertaining to training, anything pertaining to actual trading and questions about strategies, send directly to me. Anything pertaining to technical assistance or how to upload a chart, or if a recording isn't coming through, send directly to our trading consultants. Just time for one or two more questions before we have to sign off here. Hamid is asking if the PET-D works in a commodity market. Yes, it does. We have a number of members who trade commodities who say it works fantastic. Anything from livestock all the way to crude oil. So that's a great plus right off the bat. It works on anything that trends. Okay, so if you have a short-term trend in anything, it really doesn't matter. Lastly, Lee is asking, please send the link to review the webinar. Sure, you will get it, Lee. Remember, if any one of you have any questions concerning this deep discount, please, I urge you to take advantage of this because we're not going to really discount this for much longer. We've had such success with both the strategy number 4 and the PET-D, we may be increasing the prices. So if you want to get locked in to have both of these great techniques for a lifetime, I would strongly suggest taking advantage of the $14.95 deal we have, as well as the payment plan. Please don't feel that you have to come up with close to $1,500 in one lump sum. If you want to trade on, I should say, if you want to pay on a monthly basis, that's perfectly admissible. Just work something out with our trading consultants, and we'll be happy to make sure that we can meet your needs on a payment plan, okay? Remember, the way to contact us, either to sign up directly or to work out a payment plan or to get a link to the recording, either you can contact us through email, which is trading@protraderstrategies.com, or you can call us directly at area code 310-598-6677. Thank you so much for attending today. As you can see, we are an educational company. I always try to provide you with something that you can help your trading with. Even if you decide not to come on board, you can use the information we give in our weekly webinars. I hope you have a great weekend, and I look forward to all of you becoming members of SpecialistTrading.com. Thank you so much. We'll see you next time. Bye-bye.